Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, to discuss the commodities complex, something we don't touch on as much, but some of the strength we're seeing across industrial metals and soft commodities suggests that spending might be more robust than mobility data suggests. And Phil, before we get into the commodity part of it, let's talk about mobility contracting as per the data.
Yeah, today we're kind of looking at the push and pull of COVID and the recovery, because we keep seeing that the recovery data is a lot less bad than people have been forecasting. And people have been forecasting that based on mobility data and all the short-term signals and headwinds that look like we're facing. And so if you look at the mobility data, we can see that in Europe already, there's been a big contraction in people being outside, going to shops. And obviously they've had record cases now for a couple of weeks. This week, we're starting to see record cases. We're getting close to 150,000 cases a day. And so we're seeing New Jersey, some of the Midwest starting to impose lockdowns and limits on behavior as well. It seems again like we're about 2 weeks behind Europe. If Europe's seeing these mobility reductions, then we probably will see, at least we should expect to see, a double dip recession in Europe, because it's pretty dramatic what they've actually seen already in their mobility. And so we're sort of looking at two different sides of the data. The mobility suggests that the economics should be slowing down faster than the economics so far actually are.
Well, so it's interesting, since we have gotten positive vaccination results coming in, that COVID-19 versus the recovery trade is really evident in terms of stocks.
Yeah, so obviously the vaccine news was what we've all been waiting for, and it was great that we got such a strong result from the vaccine testing. 90% efficacy means once you give it to most people, it should actually work. Most of the risks of and travel go down, and so all of these beat up sectors that involve travel and being together went up. And so we saw airlines with the jets traded actually more volume than it did during the sell-off, when there was a lot of concern whether the airlines would survive. We saw hotels recover. We saw malls and real estate recover. We saw value start to outperform growth, which we've been talking about the record dispersion between value and growth. And we saw energy recover, with oil being up around about 10%. So really big recovery trade. And obviously the offset to that was all the work from home stocks suffered. So we had anything to do with streaming, video conferencing, cloud, online retail were not nearly as strong, and a lot of them fell. And you can see the result of that when you look at dispersion. So dispersion is kind of the opposite to correlation. It's looking at how different each of the stocks' returns were. And for the S&P 500, November 9 stands out. Over the last couple of years, it was the biggest dispersion day we've seen. So clearly a big rotation trade happening on that day after the coronavirus vaccine.
All right, let's wrap it up here with our last four charts, talking about the commodities and what you're looking at here that might suggest it's a little bit more positive in terms of spend versus that mobility data that we just covered.
Yeah, you look at a lot of the industrial metals, which we've got iron ore and aluminium. You look at corn and soybeans, which you see soft commodities, and they've all had a really consistent recovery since March. So that doesn't really indicate that we're seeing headwinds like we are in the mobility data. And it's just another one of the data points that's kind of conflicting with the short term. It probably supports more some of the retail spend and the economic recovery story that's going a lot better than people have thought and expected.
All right, Phil, thank you so much. Great to have you on Trade Talks.
You're welcome, Jill.
All right, thanks for joining me. I'm Jill Malandrino, Global Markets Reporter.